Among the many reasons we love to play games, be it in real life or online, is that we get instant feedback. We do something and immediately we get the consequence. Then throughout the game, we do more things, each with a small consequence that eventually lead to the big consequence of either we win the game or lose the game. If we have a video recording, then we can even analyze what we did right and what we did wrong. However, we don't even need to do that. We can remember our steps, at least to some extent. The problem with accounting and finance is that there is no instant feedback. We are supposed to make some entries, then we don't exactly know what they do to the final output of the three financial reports. To make it clearer, I'll use the example of medicine and pathology. Whenever we are sick and visit the doctor, he will tell us to get a blood test. Then somebody at the pathology lab draws out blood from our veins. The lab technician then processes that blood and gives you the blood report. It will check the various components in the blood, and based on that, your doctor will make a diagnosis. The doctor will tell us that a certain component in your blood, based on the report that was made by processing the blood drawn out from you, would be either above the limit or below the limit. The doctor will continue to say that it is the reason of the symptoms. Alternatively, the variation in the level of that component is the symptom or effect of either a virus or a bacteria or a poor lifestyle or diet. Then he will say that you should either take some medicines or eat something or not eat something. Also, he might make some recommendations for exercise or change in lifestyle. Then you will follow the recommendations given to you. Then after a few weeks, you will go back to the doctor and he will tell you to do another blood test so that he can be sure that the ailment that you had earlier is totally cured. So you go through the same process. Then that component the doctor had highlighted is now in the normal level. Finally, you are relieved and your life continues as it was before you got that illness. This is the power of instant feedback. By drawing out your blood and giving you your blood report within a few days, if not hours, you can gauge the condition of your health before and after. In this way, staying healthy is almost as much fun as playing a game because of the instant feedback nature of the blood test or pathology lab. Accounting is actually similar to the pathology lab. However, until recently, the instant feedback was missing. This changed for me, the author, already with the rise of AI. As you will see in the three diagrams below, accounting and finance have now entered the league of games where instant feedback is the norm. As an accountant and finance manager, you have to make journal entries for a transaction and then reflect the effect on the financial reports respectively. The task of making journal entry is equivalent to the task of drawing the blood for the test. Then the task of making the financial report is equivalent to making the blood report based on the test. In this section, what happens in terms of accounting and finance when we buy a house and sell it after its market value increases. It is like the doctor asking you to take a blood test after you got sick, but before you took the medicines, then a second time after you finish taking your meds. Obviously, the level of the problematic component will change in those two reports. We have to understand that even without this blood test and the blood report, we would be cured. Similarly, even if we do not look at the accounting and financing aspect of the transaction of buying and selling the house, it wouldn't make a difference to the transaction. So why do the blood test? To be sure. Similarly, why do the accounting and financial analysis? To have the full picture. It's always better to know more than less, isn't it? So let us begin the pathology of buying and selling a house. I made the 3 diagrams below using AI. This was not possible before. It would take too long to qualify as instant feedback. Now, all I need to do is choose a transaction with some values, then the AI will provide to me the corresponding journal entries, and it will directly show me the effect on the P&L statement, balance sheet, and cash flow statement, all under 2 minutes. It's much faster than doing a blood test even. I might have heralded a new standard to study accounting and finance, but that's beside the point now. So take a look at year 1. I buy a house valued at 1 million. Then I put in a down pay of $500,000 and I take a loan of $500,000 at the rate of 10% per annum. That was my transaction. Then I ask Gemini AI to produce the journal entry which is shown below. There must be a double entry, as we already know. The first effect is on the house, which is an asset. Because it increases by 1 million, it's placed in the left column or debit. Then the other effect is in the cash asset, which decreases by $500,000, and that's why we put it under the credit. Then the mortgage loan, being a liability, uses the opposite rule of assets. So because it increases by $500,000, we put it in the credit column. And as you can see below, we have to take into consideration that there is an interest to pay, which turns out to be $50,000 a year. And since it's an expense, we put it in a debit column. That's also affect the cash, which decreases, so we put it in the credit column. Now this journal entry will have an effect on all the 3 financial statements. In the profit and loss statement, as you can see, the revenue will be 0 because there is none. The expense is for the interest to be paid, which is $50,000. So the net income is minus $50,000. Look at the balance sheet now. You can see it's divided into assets, liabilities, and owner's equity. So in the asset, the house is worth 1 million and the cash is minus $50,000. So the total assets comes up to be $950,000. Then the liabilities, which is mainly the mortgage and loan, is $500,000. So the total liabilities turns out to be 500k. Now going to the owner's equity, the initial investment was 500k, and the retained earnings, again about the interest, is 50k. So the total equity is 450k. Now the accounting equation must be satisfied. So by adding the total assets, which become 950k, should be equal to the total liabilities 500k plus the total equity, which is 450k. So it is satisfied. Next, let's go to the cash flow statement. Operation activities, which is about the interest payment, is 50k. The investing activities, which is about buying the house itself, is 1 million. The finance activities, which is about taking the loan, is 500k. So the net cash flow is 550k. Now take a look at the year 2. I do a market assessment, and I found out that the market value of my house has doubled to 2 million, and I still have the loan as last year of $500,000 at the rate of 10% per annum. What's the effect of this new transaction on the accounts? The AI produced the following journal entry. The house asset is 1 million in the debit, and the re-evaluation surplus, or the owner's equity, which follows the opposite rule, has increased by 1 million, so we place it into the credit column. And as last year, the interest payment is still to be paid. Now once we fixed the accounting part, the AI now provides what's the effect on the financial statements. First, on the P&L statement for this year also, the same as last year, the interest is paid of 50k. The only change that occur are in the balance sheet. So the asset, house, is now valued at 2 million, as you can see. Cash has decreased by 100k because it's a cumulative statement, 50k from last year and 50k from year in bank interest. So the total asset now is 1,900,000. Liabilities hasn't changed. What has changed is now the owner's equity. Initial investment was 500k. The re-evaluation surplus is the extra 1 million. The retained earning, which is related to the interest payment, is minus 100k. So the total owner's equity is 1.4 million. Let's see if the accounting equation is still satisfied. As you can see, the total assets, which comes out to be 1.9 million, is equal to total liability of $500,000 plus total owner's equity of 1.4 million, which is true. In the cash flow statement, there is no effect except that of the interest payment of 50k in the second year also. So now let's go to year 3. I decide to sell my house at 2 million in the 4th month of the loan period. So I tell Gemini AI to tell me the effect in the accounting system, and it provides me the journal entry as follows. Now the cash increases by 2 million, and thus is put in the debit. The mortgage liability decreases by $500,000, and it's thus put in the debit because it follows the opposite rule. And then we also have got to factor in the interest payment for 4 months, which comes out to be 12,500, which increases, and since it follows the same rules as the asset, we put that amount in the debit column. Then the house as an asset was worth 2 million, and we have to remove it, so we put that under the credit column. The cash asset decreases by 12,500. and also the revaluation surplus decreases by 1 million, and thus we put it in the debit because it belongs to the equity component. Then the retained earning decreases by 1 million also, so we put it on the credit. Now the AI tells us the effect of this journal entry in the 3 financial statements. Like in the second year, in the third year, there is an effect in the P&L statement. The revenue is 1 million. Remember, we bought the house at 1 million and we are selling at 2 million. So it's the gross profit, you can say. Then the expenses for the 4 months is 12,500. The net income is 9,087,500. That's for the year 3, but in the cumulative P&L statement, the total revenue is the same, but the total expense is 112,500. So the cumulative net income is actually 887,500. So what's the effect on the balance sheet? We can see the asset house becomes 0. The cash becomes cumulative net income of earlier, 887,500. We paid off the mortgage, so there is no more liability. And our initial investment was 500K, and we have retained earning of 187,500. The total owner's equity is 887,500. As you can see, the accounting equation is satisfied. Finally, the effect on the cash flow statement, as you can see, is in terms of operating activities, we have to pay 112,500 as interest in total. Investing activities, we gain 1 million. Financing activities, we pay out the 500,000. And so the net cash flow is same as the retained earning, which is 387,500. In this way, through those 3 diagrams, you understood the effect of any financial transaction on the accounts and the financial reports. It's not different than lab technician drawing out your blood and giving you the blood report. It's not different than kicking a ball in football and seeing whether it's a goal or not. Before the technology of AI was available, accounting and finance was tiresome, boring, and a pain because of the lack of instant feedback. Now, as you can see, for every transaction, you can have immediate feedback on the effect on the accounting system and the financial system. Accounting and finance were never hard. It was just not taught properly. But using my 4-brain learning approach, collaboration with AI, I don't see how any student cannot love studying this subject.